The American dream of owning a home feels like it's slipping through the fingers of an entire generation, and the numbers don't lie. As of the second quarter of 2025, the median home sales price in the United States is hovering between $410,000 and $430,000. Combined with mortgage rates that are sitting around 6.2%, paying for a starter home can feel like taking on a second full-time job. It's a crisis of affordability that has left millions of people feeling locked out, frustrated, and asking if that dream is even possible anymore. But what if you could slash that crippling monthly payment by hundreds of dollars? A pretty radical proposal for a 50-year mortgage, floated by President Donald Trump, promises just that. Backers are calling it a game changer for affordability. But is this a lifeline for aspiring homeowners? The key to finally unlocking their front door? Or is it a financial life sentence in disguise? A trap that will bury Americans in debt for decades? We're going to break down the numbers, the history, and the hidden risks of what could be the biggest shakeup to the housing market in a long time. To really get the 50-year mortgage, you have to understand the pressure cooker it was born from. This housing crisis isn't just a headline. It feels like a systemic failure. The United States is facing a massive housing shortage, with recent estimates suggesting we're short anywhere from 3.8 to 4.3 million homes. This didn't happen by accident. For decades, a tangled web of restrictive local zoning laws has made it incredibly difficult and expensive to build new homes. Think of it this way: rules that demand huge lot sizes or ban multifamily homes are like telling farmers they can only plant one tree per acre, then wondering why there's a fruit shortage. They directly choke off the supply of new housing. On top of that, the National Association of Home Builders estimates that government regulations tack on about 24% to the final price of a new single-family home. That's like being forced to buy a new car, but also having to pay for an invisible second engine you'll never use. Adding nearly $94,000 in costs passed directly onto you before a single nail is hammered. When you have a chronic shortage of anything and demand stays high, which it is, with millennials in their prime home buying years, prices have nowhere to go but up. It's this fundamental imbalance that has put homeownership out of reach for so many. And it's into this desperation that the 50-year mortgage has been dropped in as a so-called solution. To really get the 50-year mortgage, you have to understand the pressure cooker it was born from. This housing crisis isn't just a headline. It feels like a systemic failure. The appeal of the 50-year mortgage is incredibly simple, and honestly, pretty seductive. A lower monthly payment. For a lot of families, the single biggest hurdle to buying a home is that monthly payment. It's the wall they can't climb. A 50-year mortgage proposes a way over that wall by spreading the same debt over 240 extra payments. Think of it like a piece of taffy. A 30-year loan is a thick piece, making each monthly bite a real chew. The 50-year loan is the same piece of taffy stretched super thin. Each bite is smaller, but you'll be chewing on it for a whole lot longer. So let's do the math. Imagine you need a $400,000 mortgage. For this example, we'll use a hypothetical interest rate of 6.25% for both loans. Keep in mind, in the real world, a riskier 50-year loan would almost certainly have a higher interest rate. With a standard 30-year fixed-rate mortgage, your monthly principal and interest payment would be about $2,162. Now let's switch to a 50-year mortgage with that same rate. Your monthly payment drops to around $2,148. That's a difference of over $300 a month. For a family on a tight budget, that's not just pocket change. That could be the difference between getting the loan or getting rejected. It's the difference between renting for life or finally getting a set of keys. Proponents argue this opens up home ownership to a whole new group of people, especially younger buyers who are completely priced out of expensive cities. It's sold as a foot in the door that would otherwise be slammed in their face. That lower monthly payment feels like a lifeline, but it comes at a cost that is just staggering. The real price you pay for that immediate relief is in interest, mountains of it. This is where the life sentence nickname comes from. Let's go back to our $400,000 loan. On that 30-year mortgage, you'll end up paying about $486,000 in total interest. Your $400,000 house will ultimately cost you around $886,000. Now brace yourself. With the 50-year mortgage, the total interest paid balloons to nearly $889,000. That's almost double the interest of the 30-year loan. Your $400,000 house now costs you nearly $1.3 million. It's like buying a shirt for $400,000, but agreeing to a payment plan that costs you an extra $889,000. You're literally paying more for the payment plan than for the house itself. But the danger isn't just the jaw-dropping total, it's how slowly you build equity. With any mortgage, the first few years of payments are mostly interest. But with a 50-year loan, that effect is put on steroids. After a full decade of making payments, you would have paid off less than $22,000 of your $400,000 principal. On the 30-year loan, you'd have paid down more than 3 times that amount. This creates a really dangerous situation where you build wealth at a glacial pace. If home prices dip even slightly in the first decade, you could easily find yourself underwater, owing more on your loan than your home is worth. It's like being tied to an anchor at the bottom of a lake. If the water level drops, you're just stuck on the muddy bottom, unable to swim away. And since most people sell their home long before 30 or 50 years, you could sell after a decade only to find you've built almost no wealth. It starts to look less like ownership and more like a rental arrangement where the bank is your landlord for life. This is a lot to digest, and we're about to get into who really benefits from all this. If you're getting some value out of this breakdown and want to stay ahead of the economic news that shapes your life, do me a favor and hit that subscribe button. It's a huge help to the channel and make sure you won't miss what's next. Whenever a new financial product like this pops up, you have to ask the classic question: cui bono? Who benefits? While a buyer gets the short-term relief of a lower monthly bill, the main winners here aren't homeowners. The clearest winners are the banks and mortgage lenders. A 50-year loan is a guaranteed fire hose of interest payments for half a century. As our math showed, the lender's profit in the form of interest nearly doubles. Home sellers also get a nice boost. By making it seem like people can afford more each month, longer mortgages pump up demand. But more buyers competing for the same limited number of homes pushes prices even higher. It's like trying to fix a traffic jam by adding another lane to the highway. At first, things move a little smoother, but soon enough, more cars just show up to fill the space, and you're right back in gridlock. Only the highway is wider. Any affordability gains from the lower payments are completely erased. To get how radical a 50-year loan is, you need a quick history lesson. Before the Great Depression, most mortgages were short-term loans with massive balloon payments. The crash of the 1930s wiped out a generation of homeowners. In response, the government helped create the stable, 30-year mortgage we know today. It was designed to give homeowners a predictable path to full ownership. A 50-year mortgage unravels that safety net, pushing us back toward a model of lifelong debt. And that brings us to the most important question. Is the 50-year mortgage anything more than a demand-side gimmick in a supply-side crisis? It completely misunderstands the problem. America's housing crisis isn't happening because monthly payments are too high. It's happening because home prices are too high. And prices are too high because we have a decades-long shortage of actual homes. Stretching out debt doesn't build a single new house. It's like trying to solve a citywide drought by giving everyone a slightly smaller water glass. It completely ignores the empty reservoir. In fact, many economists warn it could pour gasoline on the fire. By fueling demand and letting buyers bid higher, 50-year mortgages could inflate home prices even more. The real solutions are way harder and politically messy. They involve reforming those restrictive zoning laws that block denser, more affordable housing. They involve streamlining the regulations that add tens of thousands of dollars to the cost of a new home. As analysts at Goldman Sachs have noted, fixing these land use regulations is the single most important thing we can do to increase housing supply. Anything else, including the 50-year mortgage, is just a distraction. It's a painkiller that ignores the disease and comes with some very severe long-term side effects. So back to the big question, lifeline or life sentence? The answer, it seems, depends on where you're standing. For a tiny slice of buyers, right on the edge, it might be the only way they get a loan approved. A flawed key that's better than no key at all. It offers immediate, real relief with a lower monthly bill. But for almost everyone else, it looks like a dangerous trap. It's a deal that asks you to trade a little short-term breathing room for a lifetime of debt, nearly double the interest, and an agonizingly slow path to building wealth. It creates huge risks for homeowners while lining the pockets of lenders and could make the housing bubble even worse. It's a solution that doesn't solve the real problem, and instead just kicks the can down a much longer road. Now I want to hear from you. What's your take? Is the 50-year mortgage a necessary evil to get people into homes, or is it a generational debt trap we should run from? Let me know what you think in the comments below. And don't forget to like and subscribe for more deep dives into the issues that shape our world.